Hi, everyone. Thanks for joining and welcome back to Wall Street Silver. Our guest today is John Feneck, portfolio manager and consultant at Feneck Consulting and co-founder and CEO of Fortuna Silver, Jorge Ganoza. Welcome to you guys both.
Thanks,
Thank
Ivan.
you.
Welcome.
So, Jorge, John, thanks for joining us. We really appreciate it. I wanted to share the silver chart right off the bat and get your take on what's going on in the markets right now. This is the dollar index, and it seems to have definitely lost its uptrend. And of course, as it got up as high as almost 114, and now here we are down at 102 and about to break through 100. So dollar weakness definitely relative to the other major currencies. And then, of course, that leads into gold and silver strength. So, Mr. Ganoza, when you see something like this, you're CEO of Fortuna Silver. Obviously you got to be happy, right? We were down at 1600. It's not the best place to be as a producer, but what are you looking for going forward? Is this sustainable, or is this just a spike up that we're not going to be able to hold?
I usually not looking at charts on the short term, but structurally, I think we all concur here that we have all the elements for sustained higher prices, geopolitical tension. What more geopolitical tension do we want? Do we need? The view on inflation and whatnot. So I think all the elements are there for sustained higher prices. I remember back in 2008, the spike in the dollar index, and then the collapse leading to higher prices and a bull run that took us to the 2011 peaks. Are we seeing something similar? Perhaps, but I think structurally we have all the elements there for longer term sustained higher prices and way above $1,900 in gold, which is something refreshing to see, that weekly close above 1,900, right?
Yeah, and silver also seems to be getting, banging around 24. I know silver is near and dear to your heart, that, Fortuna Silver. But gold does seem to be leading. Gold seems a little bit more like the leader in this market right now relative to silver.
And it's usually the case. Silver usually lags gold, and then once the bull leg is better established, then silver outperforms. So I think looking at the chart, I would expect that if things continue as they are, we'll start seeing silver outperforming.
John, what do you think?
Yeah, so I agree with you, Jim, that the dollar decline is definitely contributing to this move up in gold and silver. We broke that 105 level, which was decent support, which is great to see, and now we're approaching 100 on DXY. So when you go back to the chart of gold, you're looking at like a 300 ounce, $300 per ounce move almost here in literally a few months. So that's something to keep in mind, is that the relative strength index, RSI, on gold is pretty elevated right now. And we saw a little bit of a sell-off today. I think, the takeaway positively, however, is the weekly close, as Jorge pointed out, over 1,900 is big. Because traders and institutions look for that monthly or weekly or quarterly close over a certain dollar amount. And that 1750 to 1850 an ounce level was something that we traded in a lot of weeks in 2022. So to see a break above that is very bullish. And the equities are responding. If you look at GDX and GDXJ, are both doing extremely well, where a lot of that big money is in the ETF land.
Here is GDX and GDXJ. They look almost identical in terms of the two charts. But yeah, everything's above the 200-day moving average, and looking good. We all invest in a lot of these mining companies along with the physical, silver metals in Wall Street Silver, our members. But the all-time high of gold, we're a lot farther away from the all-time high of silver. But the all-time high for gold is close to 2080, and I think that was August of 2020 when we hit 2080, and then we touched we got real close again back here in early 2022, but it failed. Getting through that would be critical. I mean, if we get through 2080 again decisively, like let's say we hit 2100. I mean, I'm not a technical chart guy, but is that like something you'd expect would just then take off, or is that it's got to build a new base at that level before it takes off?
I think, a retest of that 2000 to 2100 announce would be very bullish. I think it's very much in the cards for this year. If you look at what we need for gold equities like Fortuna to do well, it's not necessarily 2000 plus an ounce in my view. A lot of companies are profitable at much lower prices, and so I think it's partially, like Jorge pointed out, like the geopolitical picture, how that develops, Jim, right? Like Russia is escalating things in Ukraine, not de-escalating, in my opinion. And the news is clearly showing that, unfortunately. You saw China running drills in Taiwan 2.5 weeks ago. I mean, this is a very interesting backdrop that we didn't have in other gold rallies, right? And look at 08, 09. We were coming out of the financial crisis, yes, but we didn't have this geopolitical issue. We didn't have the Fed doing what they're doing. There's a lot going on right now that supports gold and silver.
Yeah. And for you, Mr. Ganoza, these prices at 1900 gold and 24 silver, I mean, your cost per ounce is way lower than that. So you guys are producing companies become very profitable at these levels, don't they?
If you look at a global mine supply, as reported by the World Gold Council, the average all-in sustaining cost for, worldwide gold production stands around $1,300 today, slightly below that. Let's say that's 50% of world gold production comes out at an all-in sustaining cost of around $1,300, right? So inflation, only a year and a half ago, 5 quarters ago, that figure was closer to $1,100.
Wow.
Right?
Wow.
So we've seen that figure move up. So we still see healthy margins. Most of us are budgeting 2023. We budget with much lower prices, but most of us are budgeting with $1,700 gold, right? So against our conservative budgeting figures, 1900 is quite refreshing to see. But I think I looking at the bigger picture, looking at the trend, I struggle to see why, with all the geopolitical tension, the financial stress that we have in the world financial systems, the amount of buying that we are seeing emerging from central banks, gold is not performing better. And I find the explanation in that investors have just, over the last years, have just been distracted by other asset classes like crypto,
the NFTs,
crypto, the green energy metals, green revolution, the critical metals, lithium and Tesla, and so a lot of that money has been seeking returns and achieving healthy returns and leaving gold on the side. But I believe there is a day of reckoning, and I think perhaps that's coming now.
One of the other things that is a big impact on gold and silver prices is monetary policy. And what we have here is the Fed tool that's predictive of future rate hikes based on pricing of different bonds. They're able to, predict the likelihood of a rate increase at the next meeting in February. So, John, explain this chart to the audience, please.
Sure. Yeah, I've been using this for years. I think it's very helpful. It's a free tool. You can see in the center there, Jim, to the right of the large bar chart there, that current target rate is 425-450. That means target rate in basis points. So what that left hand 93.2 is showing you is that there's a probability of that current target rate increasing by 25 basis points on February 1st. So it's a 93% probability we're going to get a quarter point hike on Feb 1. If you look at the top left corner there, Jim, and click March 22nd, please. Yeah. So you'll see there a 78% chance. We were just looking at this, Jim, a few minutes ago. It was a 75% chance. Now it's a 79% chance that you're going to get a quarter point in March as well. So, to us, we've been talking about the Fed flipping, meaning either halting or reversing by May 31st-ish, roughly. We've been saying this since March on Kitco of 2022. Okay, so we've been in a different perspective than many gold or silver bugs in that we've just been trying to report it as we see it, right? Like I think the Fed has been very hawkish. In November, Powell was the most hawkish I've ever seen him at that presser. December was slightly less hawkish, and now in February you're seeing them backing off, right? There's no more 75s necessarily. But a 50 isn't out of the question, in my opinion, at some point this year, if the economic data continues to do well, right? Like, I mean, we're throwing a party last week on a CPI that's at 6.5%. That's nowhere near their target rate, right? So, like, yes, it's coming down, but is it coming down enough? That's going to be the question that we look for, as we move forward throughout the year.
Well, there's a question mark on whether we can ever get back to 2%.
Oh yeah,
a lot of the
close.
A lot of the reasons we were down there at such low inflation for the past few decades was, outsourcing labor, cheap labor in China. Well, we saw now the recent news that China's demographics are upside down and Chinese population is now in decline. So, how much cheap labor is there still for exporting inflation? We don't seem to be investing in energy like we used to. One of the big things that brought down energy prices from the 70s was all sorts of new oil supply projects coming online, whether it's Alaska or Gulf of Mexico or the North Sea. Well, we don't have that happening now. So without, these favorable demographics and favorable energy trends, I question whether we can ever get back down to the 2% target, or at least keep it down there, right? It's like, they can kill demand. They can raise interest rates and kill the economy and bring down inflation. Yeah, but as soon as they turn on the economy again, if you haven't solved the underlying problems of energy and labor, just all the different variables, if you haven't solved those problems, as soon as they go back to easy money and turning the economy back on, boom, inflation goes back to new highs, right? It's a tough situation to resolve. But that's what we're looking for, Mr. Ganoza, right? Is the Fed or the central banks, are they going to pause, and that's the next trigger for the gold and silver markets? Is, you think, just waiting for that pause, or waiting?
That is the evident one right now, right? But again, the world is such a distressed situation that I think more catalysts for gold could come from anywhere. This is the evident one, right? Like John is pointing out right now, and in front of us, right?
So, Mr. Ganoza, Fortuna Silver, I saw the other day you just released your guidance for next year, and it looks like gold production is up, silver production is down, and you've got a new mine coming on, Seguela, in the near future. Walk us through these numbers and the changes for Fortuna Silver that investors should be watching.
Yeah, 2023 is an exciting year for the company and our shareholders, as we're bringing into production what will be a flagship asset for the company. Is the Seguela project. We're in the late stages of the build there, preparing for first gold coming around mid-year. And it's a flagship asset. It will be meaningful production in the range of 120, 150,000 ounces of gold a year, but more importantly, at an all-in sustaining cost of under $1,000 per ounce, right? So for 2023, that mine is going to contribute only for the second half of the year, as first gold comes in around June, May, June. But it's an exciting growth project. No, it has reserves for close to 10 years as it stands today, with exciting exploration potential. So that is what's driving growth for us in 2023. So we were able to exhibit growth in gold in 2022, and we are continuing in that growth path into 2023. But more important than growth for the sake of growth, is growth with low cost ounces, right? That's key here. We're talking about what prices can do or not, but as a steward of capital, as responsible for running a mining company, what I want to deliver to my investors is a company that can perform throughout the precious metals price cycle. We are all here bullish on gold long term, but we well know that short term, we must be able to tolerate some violent swings in the price. Until our thesis proves right, we might see violent swings to the downside. And you as an investor need to know that the company you're invested in can withstand, tolerate, and even continue to thrive in that low price environment. So my job as CEO of a mining company is to put together a portfolio of assets that can perform throughout the precious metals price cycles, right? That is what gives true optionality to an investor in a mining company. You don't want to be nervous that the company is going broke, or you are blowing all your debt covenants or things like that, right? So that is what we're putting together in Fortuna, and the newest mine is a significant contributor to that. Yeah.
John, do you have any questions?
Yeah, Jorge, congratulations on the press release. I'm a shareholder as well, right around $4 a share, so a little higher than here. When I look at your highlights there, I notice Peru and there's been so much news over the last year and a half with Castillo, and I know you're pretty well versed in what's happening in Peru. Were you a little disappointed that maybe your stock didn't get more of a bump here with the recent Castillo news, that this is probably getting close to the end here for that kind of regime, or what are your thoughts?
We would all love to have our mines in Nevada or some jurisdiction like that, but mining is a frontier business. Mining is a frontier business, and we are located in jurisdictions that are mining jurisdictions, have long and proud mining traditions, but we need to have stomach to tolerate some political instability along the way, right?
Sure.
So we have seen some turbulence in Peru. Our Peruvian asset is a small part of our NAV. Okay. It's around 10% of NAV for the company, slightly less than 10%. So, our production is uninterrupted, has never been interrupted through all of this political turmoil. I think what's weighted a bit heavily on the stock recently, which the stock had a great run. We've been outperforming the market and the GDX and everybody over the last 6 months, is we continue to see some grief with the Mexican authorities on a key environmental permit. Our mine continues to operate, continues, to deliver, perform, but it's just noise in the background. There's permitting issue with the Mexican authority. We have kind of a Mexican standoff with the environmental agency there. We took that to court last year. We won, and when we thought the problem had gone away, it surfaced again on the 5th of December. And I think that, took the stock down about 10% at a time when everybody just went up. But outside of that, the mine continues to perform, continues to produce. We have 4 operating mines today and a 5th one coming. So, or that we don't, or performance or delivery doesn't rely only on one asset, right?
Absolutely, yeah.
Looking forward to it.
Good.
Seguela is the key catalyst, though. This year, the fifth mine that's coming online. It's going to lower your average all-in sustaining cost. I think it's going to be at $1,000 an ounce, whereas your current average is a bit higher than that in the $1,300 range. So, exciting things to look forward to in 2024 once Seguela gets fully optimized and up to full speed. Correct?
Yes, the organization is strong, the asset base is strong. I think when we expanded our business into West Africa in 2021, and there were a lot of questions around our ability to integrate a West African business. No, usually the market likes to box us as a Latin American producer or a West African producer, a copper producer or a gold producer, or even just a silver producer. Mm-hmm. So when we break that mold, investors get a bit nervous, analysts get a bit nervous, and we did break the mold, right? We were not just following the herd. We decided that West Africa was a place to be, and we currently are operating two assets there: an operating mine in Yaramoko and developing this exciting new project in the Ivory Coast, Côte d'Ivoire. So we have geographic span in two well-established mining regions, West Africa and Latin America through the Andean Cordillera, right? So well-diversified, located in good mining jurisdictions. Again, we need to have tolerance for some geopolitical instability and issues. Well, mining is a frontier business and has always been, right? So
yeah. Well, thank you very much, gentlemen. We appreciate you joining us, and we will definitely do it again later this year.
Thanks, Jim. Thanks,
Great
Ivan.
to be here.